Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So I was about to buy some stocks, add a new company to the portfolio, add to some of the companies that I already own, and I've got about £1,523 to invest today. And I just thought, you know what, let me just share it with the community, considering what's happening in the overall market, the fact that everyone is scared right now, the fact that people are fearful in terms of what is happening now. I just want to make sure that basically we are buying high quality businesses, and I want to share with you guys what I'm doing right now, because it is important to really genuinely think about, you know, in the long term in terms of when it comes to investing. 5 years ago when COVID happened, a lot of people lost a lot of money because they sold it those days and they thought the world's about to end. 3 months later, the stock market was up about 5%. By the end of that year, we were up about 20-something%. 2021 was probably one of the best years we've had. 2022, there was a decline in the S&P 500, only the technology sector mainly. Energy and other companies have done absolutely amazing. And then consumer discretionary, because interest rates were going up, a lot of the tech companies went down. And then potential recession, all of these madness. 2023 and 4, we were up 20+%. So the moral of the story is these things do happen, and we will see sometimes the stocks will go down and so on. Right now we have a great opportunity for us to basically look for investing in the stock market and just trying to find high quality businesses that you know the business well enough, you've done your research, and you know they're going to do well over the next whatever years. And that's exactly what we're going to do today. I'm going to basically share with you guys 3 companies that are, 1 brand new, 2 that are basically existing companies that I'm adding to in today's market. And the first one is Nvidia. You might be thinking, what is going on here? But Nvidia has been sort of on my radar for quite some time. Right now, year to date is down about 29%. I do like to own stocks that are basically high growth companies, because like I've got companies like Broadcom, ASML, and Salesforce, and we used to have Microsoft, the Apples, and so on, CrowdStrike. I like to have those technology companies in the portfolio because it helps with the overall gains. Remember that, because remember, you're not just buying those dividend paying companies. That's absolutely amazing, but if you want to perform, if you want to either outperform the S&P 500 or similar sort of returns, then you need to have some of those high growth companies. And Nvidia is probably one of the best out there right now, because when you look at the earnings expectations for this company for the next 3 years, you will see basically we're looking about over 52%, 27%, and 16%. Now that's absolutely amazing if you ask me, and there's a lot of analysts looking at this company. Now the next 3 years for the revenue side of it, we're looking about 56%, from 205 basically 5 billion, 204 billion to 252 billion to about closer to $300 billion. So absolutely amazing, nothing to worry about in terms of growth side of it. Now of course, if things don't work out with the China situation happening and the world basically is not going to buy the products from this company, like the US itself and the hyperscalers, the Magnificent Seven will still buy these, because AMD companies like, for example, AWS or Amazon, for example, Microsoft and Apple's and whatever are buying products from this company. So that plus the rest of the world, I'm sure this company will have absolutely no issues, even if the earnings decline basically, and these analysts are wrong. Okay, this company will be absolutely fine in the long run. And what I'm doing is I'm gonna buy it, I'm gonna hold it for at least another 5 years or so. Now if we look at a couple of things in terms of rating side of things, you can see where you have strong buys for this company. 45% people have said is a strong buy, 11 buys, 6 holds. And if we look at the price, we're looking at about 78% upside from where we are, $171 per share, and right now the current price is less than $100. Now if you look at the financials for this company, you'll be surprised. $5 billion of basic total revenue in 2016 to right now $130 billion. Gross profit of almost $98 billion. Net income of almost $73 billion. That's bigger than half of the maybe a lot of the companies in the S&P 500. That net income that they're receiving right now. Now That could decline in the long run, but right now the company is absolutely in great place. Even if they make a net income of $50 billion, that's still massive from basically where they are right now. So overall, really great company. And one of the things I actually noticed is, look at this, forward PE of about 22. Check this company, Procter & Gamble. It basically has 25 forward PE. And guess what? It's expected to grow about 4, 5%, 6%. So you telling me Nvidia is not cheap right now in comparison to what's out there right now. So overall, I really like the company. I did buy some shares last couple of days, and I'm going to show you exactly. I'm going to buy 5 more right now. Right, here we go. So Nvidia, $95 per share right now. I do own 10 shares, down about 9% because I bought it about 3 days ago and so on. And right now what I'm going to do is buy another 5 shares of this company. So we'll do that right now. So you can see about $370 pounds per share, per share value. And we'll send that to the market. And my average right now as we speak is $102 per share. So about let's call it 80 pounds per share right now. So that's 15. That's the first company. So that's the only new company that we're going to add to the portfolio today. The rest of them are existing company. And the next one I'm going to show you about today, talk about today is Novo. And this is a company that I've been buying over the last few weeks. Is down for the 1 year, is down almost 50%. A year to date down about 26%. Has a forward PE of about 17 right now. Basically, Wall Street is saying is a buy. We've got 4 strong buys, 3 holds, and 1 strong sell. And overall, they expected the earnings to basically the price to be have an upside of about 67%, $106 per share is where they think the price should be. Earnings expectations moving forward for this company, 25%, 2%, 15%, and so on. And then when it comes to revenue, 28%, 16%, so basically 11%. And just have a look at this. So this is basically how the company makes money. Diabetes and obesity care, for example, they have a 38. So it's about 93% of their revenue comes from that side. Rare diseases is about 6.4%, and others is just slightly very minor. And look at this gross profit. So this is how much they made in revenue, 40 billion, just $40.8 billion. Gross profit, we're looking at about 84%, almost 85%. Operating income of 44%. Pre-tax incomes of 43%. And the net income, we're looking at about over $14 billion and all 34 let's call it about 35% net income, which is absolutely amazing. So of course they're going to spend a lot of money in research and development and so on. So overall, it's a really great company. I have had it just a few weeks. I've been thinking about a couple of months in the portfolio, and I'm going to continue holding this. I'm going to add to it today again. If we look at, for example, we've just checked that already. If we look at their revenue side of things and basically how they have been doing over the last whatever years, we've got 15.7 to right now $40 billion, gross profit of $34 billion, and then that net income is about $14 billion right now. So right now my average is $80.50 whatever, and I'm gonna buy another, let me see, I think I said 5 more shares of this company. We'll send it to the market, and then there we go. So there you go. That's basically now my average right now as we speak. So I've got 40 shares so far. I'm going to continue holding in this one, and like I said, I'm going to add more inshallah in the next few weeks. And the final company I want to talk about today is ASML. As you can see, for the 1 year, it's down about 36%. A year to date is about 11% down. Right now, it has a forward PE about 23. Earnings expectations moving forward, we can see 32%, 20%, 20%, 11% for in 2028, and then about 21% this year, 11%, 10%, 10%. And again, despite what is happening with the tariffs and so on, with what's happening with China, all of these things are a bit scary, but at the same time, this is the type of company that I genuinely have nothing to worry about this. Yes, business might slow down for a bit maybe now, but then in the next few years, I'm sure it will bounce back, because that's what normally happens. The equipment this company makes is what is needed for every single company, the TSMCs and Intels and whatever need in order to actually make those chips. Nvidia designs, these companies make it, and ASML actually has the machines that cost over $300 million to basically sell it. And I don't think anything is going to happen to this company. InshaAllah not. So yeah, let's see what happens. But right now, according to Wall Street, is that we have 20 strong buys. We've got 8 buys, and then 8 holds and 1 strong sell. 10 holds and 1 strong sell, and then we've got about over 50% an upside from where we are. $940 per share is where they think the price should be. In terms of financials, if we look at this, you can see from $6.8 billion to right now almost to $30 billion, $15 billion of gross profit, and then looking at the net income side of it, 7.8. Now, even if you said, okay, I'm worried about this company longer term, and in terms of debt and so on, you can see it has a total. Let's go to the total assets of $50 billion against the total liabilities of $31 billion. So the company is not going to run out of business, or it's nothing crazy is going to happen. Yes, it might have a couple of years where earnings are not great. We've seen that with Qualcomm, we've seen that with other semis as well, and that's normal thing to happen. So, but it will eventually bounce back. And here we are. So the final company that I'm going to add to today, I'm just going to buy 1 share, and I actually did buy another share a couple of days ago. In fact, let me show you. I've got 16 shares. Remember, I used to have 15 shares. I bought 1 yesterday, or was it the day before? I can't remember. Right now, my average is 500 and 656 or 523. Like now, let me just buy 1 more share. So that will be sent to the market. Here we go. And that will change very quickly, and then there we go. So that's my new average. I've got 17 shares. I'm going to hold on to that. I've got about £400 to invest, so I might do some buys later, or I might just wait until next week and see, basically assess the situation. So overall, that's where we are right now. That's what I wanted to share with you guys. I was planning to do like I said, I was planning to do all the buys, whatever, but then decided, of course, to share it with you guys. If you haven't liked the video, please do so already. And stay the course. Don't worry too much about what's happening in the overall market, please. And markets will go up, markets will go down, but the most important thing for us is to focus on what is happening in your, what is happening in the long run. Okay, so just focus on the long run. Don't think about just like the fluctuation of the prices what's happening right now. As you can see, I'm down over £8,000 just this week, but you know what, in the long run, this is what matters. Anyway, I'm going to stop the video here. Have a wonderful day. Assalamu Alaikum.